Securing the lowest possible rate for your home has less to do with scouring ads and, if you're like me, making a spreadsheet of all of the options, and more to do with the details of your loan. When you're looking online at rates or mailers, typically lenders are picking the best scenario as the basis for their advertisements, which makes sense, right? They want to get you to call them. And usually there is tiny print at the bottom specifying additional costs, terms, and a date. If it's a mailer, it's typically not today, that the rate's valid for. There are a lot of factors that play into this specific scenario that influence your specific mortgage rate. Listen, you making your lunch is interrupting my recording. Go back to your hobbit hole. Hey, Gus. He's a boy. One factor is loan type. For example, an adjustable rate mortgage or an ARM can provide a lower starting rate versus a fixed rate loan, but the rate changes once it's out of the fixed rate period. Some rates advertised online are ARMs, and you wouldn't know that until you look carefully at the details. The loan term affects the interest rate as well. Generally, mortgage terms are from 10 to 30 years. Shorter terms are going to equal lower rates as equity builds more quickly and thus reducing your lender's risk. Longer terms have a higher risk, and therefore the lender takes a lot longer to make their money back, and thus it has a higher interest rate. Next, there's something called loan level price adjustments, or LLPA'S. Interest rates are also based on these LLPA'S or risk factors. For example, a high loan to value and a low credit score carries a higher risk and therefore a higher interest rate. You also see LLPA'S on second homes or investment homes, since if a borrower is having financial trouble, these are usually at higher risk of falling past due. Look, each loan and situation is unique, and the interest rate that you may get may not be the same one as your neighbors or your friends. So where do you get your information if you don't have a trusted friend who works in the mortgage business? Well, the Consumer Financial Protection Bureau, or CFPB, has an online tool to do just that. Their information comes from data-backed research and is updated every Wednesday and Friday. So if you'd like a reliable way to see general rates for today for a loan based on your credit score, your home value, loan amount, and the state that you live in, you can find a link to this tool below or go to consumerfinance.gov and take a look around. Hey, I hope this was helpful, and if you have questions or any comments, you can reach out, and I appreciate you listening.